We're very excited about this next session. We have with us three young women who are co-founders of promising early-stage African fintech companies that are addressing the SME market. They will talk about the joys and the challenges of building new fintech companies. We will hear their advice to others on how to best invest their time, as well as how to overcome the fear of failure. We will also hear their views on where the energy in fintech will be devoted in the coming year. And now, over to my colleague Charles to introduce our panelists.
Hey everyone, welcome back. We have a great session here with three founders from fintech companies across Africa. We're going to have a little conversation about what it takes to launch a startup company on the continent in the fintech space. And for those of you out there who have ambitions to start a company or involved in an early stage company, this should be a great session for you. So Caroline van der Merwe from SmartWage. We have Tumi Moagi from Growth Factor Technologies in Ghana. SmartWage is in South Africa, by the way. And Megan McCormick, co-founder and CEO of Oze in Ghana. So three companies, and what we're going to do is we're going to let each of you take 1 minute to talk about your company, and then we're going to get into the conversation about what it takes to be successful in fintech. So Caroline, why don't you start?
Sure. So SmartWage is a South African technology company that allows employers to offer their employees access to their earned wages. And what that means is that an employee is able to draw some of their wages a little bit earlier in the month. And that way they build financial resilience and they avoid payday loans. And essentially SmartWage makes it really easy for the employer to offer this benefit without any disruption to their payroll.
Great. Tumi, why don't you go next?
All right. So at Nvoicia, or Growth Factor Technologies, what we do, we provide access to finance for small businesses. And we do this through data-driven technology, just ensuring that we build credit models that make it possible for small businesses that are usually rejected by the banks to actually access working capital. And this is typically small businesses that provide to reputable companies, and maybe they also need financing with on their invoices, on their post-dated invoices. We ensure that we do due diligence and we actually pay for their receivables ahead of time.
Great. You know, getting paid is so critical for small businesses, right? I mean, just getting paid on time. The difference between success and failure often is about, how quickly you get paid. So,
yes.
Megan, tell us about Oze.
Sure. So Oze is replacing the ledger book, the paper notebook where small business owners record their business data like sales and expenses. We leverage tactics of behavioral science to help the small business owner actually form a habit around keeping financial records and then use those records to do two things. One, make better business decisions, and two, access affordable capital.
All right. You're all very concise descriptions of your company. We maybe get in a little more into it later in terms of what you do and, probably woven into the conversation. But what I really want to talk about today is kind of just what the environment is for launching a company, what the biggest challenges are. We'll kind of start there. So I kind of like to hear, starting a new company in Africa. I know you're in different markets, but some of the challenges may be the same, some may be unique to your markets, but kind of what are the biggest barriers these days to launching a company? And, maybe a little commentary on how those barriers can be reduced or eliminated. So, Megan, why don't you start?
Sure. I think there are a couple of challenges, some facing businesses specifically in Ghana. One is access to early stage capital. So I'm very fortunate that I'm coming from the US, where we have early stage capital and we have pitch competitions that give away free money so that we could actually get a product out into market before we had to take any dilutive funding. But for your average entrepreneur in West Africa, you have to have a side hustle, have a day job, and be investing that. And that means that you're going to move pretty slowly. And it also means that somebody who is more well-financed can come in and quickly take over the market. So I think that's a primary challenge. A more specific challenge for the fintech industry is because we're pushing the envelope on the different financial products and services available to consumers, we can sometimes be in front of the regulatory bodies. So for example, I'd much rather be in a clearly regulated industry where I know this is a license I need to get to start operating than being somewhere in a gray area where maybe not even the regulator is sure where exactly you fit. Because uncertainty, I think, is more harmful to an early stage startup than, just something costing more necessarily. But I'm excited because Bank of Ghana just came out with a sandbox environment. So we're following in the footsteps of innovative countries like Kenya so that business owners or startup can actually start to test and try new things and then figure out the regulation in hand with the regulator. So I think it's a big step in the right direction.
Okay. Tumi, what would you add to that?
Yes, definitely the points that Megan had already mentioned, regulation, and also the fact that there's very little support, financial support for startups, especially because we also launched, our first launch was in West Africa in Ghana. We also finance is a huge issue. And I would also like to add on to her point and say that also education, the work that Megan's company is doing is really quite big, because education for educating a small business on exactly why or what it is that you need for you to actually have access, to finance or to build credibility is also quite a challenge. But yeah, the major one, the industry specific one being, support from government. So without regulation, without a sandbox, it makes it difficult for the government to also fully appreciate and understand what you're trying to bring to the market.
Okay. So you actually make an interesting point, which is that, and if I understood you correctly, that sort of teaching the market that they need what you're offering. Is that the situation you're in, or is the need is it like at a conscious level that they need what you're offering, or do you sort of have to explain, no, things could be a lot better if you had access to these? Is that what you're saying? Is it more the educating of the market at that level?
So, okay. So Charles, so how based on our experience, it says my network is unstable, so please let me know if I'm staggering. But based on our experience, it's also quite, when we started, the market couldn't really understand, first of all, who they can go to access finance. So they're not aware even of the other fintechs, other options in the market apart from the banks that are rejecting them. And when you ask them why the bank's rejecting you, all they'll tell you is they want too much documentation. And we're like, okay, let us look into what it is this too much is, and what works for you as a startup, and what works for what works for you as an SME, and what works for our requirements as a startup, to make sure that we meet a level ground. And you'd find that the basics, like your company incorporation document, or even having an incorporated company, does not really, what was not top of the mind, top of their mind as a startup owner, or even how they transact. They do know that, yes, at the end of the month, I know that there's 2,000 CDs, or in this context, maybe $400 coming into my store, but they don't really know how and when. They don't know, they don't really record such. So it makes it difficult for a lender to really see you as attractive or deem you fit. And it also makes it difficult for you as a business owner to actually monitor your transactions. So a bit of education on, financial management and proper recording was required.
Okay. Yeah. Carolyn, what would you add to that? I know education seems to be a component of a lot of fintech companies facing the SME market, it seems like.
Yeah, absolutely. I mean, I think one of the major challenges we face is also educating our customers, because we're a B2B2C business, on what wage access is all about. And there's a sort of a reluctance among employers to get involved in their employees' financial lives. But the truth is, what we're trying to explain is the link between financial resilience and financial wellness, with productivity and attendance, which directly affect the business's bottom line. And so when you start to have this conversation with businesses, this type of technology is one of the most impactful employee benefits to come since offering health insurance and things like that. So businesses are very prepared to spend on employee benefits, and it's up to us to educate them on what impact this type of thing can have. And also the acknowledgement among businesses that about 80% of South Africans, for example, resort to payday lending. And that they're paying like ridiculous APRs on those types of loans. So education is a big part of what we have to do in our sales process.
Okay. Some other challenges to launching a company. Sort of before we got on, we talked a little bit about how many of you are involved in recruiting on a sort of nonstop basis. What is the talent pool situation like for an early stage company right now in the markets you operate in?
I mean, I would say it's difficult to comment on the talent pool, because I find that the people who are interested in early stage company have a very specific mindset and aims for their career. So it's much less about their talents and more about their orientation towards their career and whether they're prepared to take the risk for a job that's generally much harder and much less secure than anywhere else. And I think that that's most sort of emphasized when you're looking for software engineers. You have so many other options for much more secure employment and much higher pay elsewhere. And I know, Megan, you've got some interesting insight on that.
Yeah, I would say we've seen recruiting software engineers in the last couple of months. We've seen entry-level salaries almost double. And that, as I mentioned earlier, uncertainty is harder to deal with than just expense. So the fact that all of a sudden there seemed to be a big acceleration in how much people were willing to pay software engineers, I think it's related to COVID and kind of the globalization of the tech talent market. Which is great. We love more young people making more money in the markets that we work in, but it also can be challenging as a business owner. And I think it's compounded in that we're starting to see exits in the West African market. I think most notably in our industry, Paystack, where people, saw the benefits of having a stock option. Because before that, even Jumia, we have lots of ex-Jumia people working at Oze, and Jumia didn't give most employees stock options. So even though we look at that as a big success in terms of having people recognize, okay, I maybe am deferring some payment and security now for the potential of a big payout later, they haven't seen it, so they don't necessarily believe that it's true. So in other markets, you might say, okay, you're making half as much with us as you could make with Google, or you could make with Facebook, or you can make with Microsoft, but you're owning a piece of the company. We've had people say to us, I'd rather just take more money now, please. So I think too, we need that as we see like the access to higher paying jobs increase. We also need to see more exits so that early stage startups can still get the best talent, because they see that there's benefit in putting some of their earning potential at risk for a big windfall in the future.
Yeah, the Paystack was a big exit. So did that meaningfully change attitudes? I think you're suggesting they need more exits to really move the needle on that. But did you see a difference after Paystack in recruiting?
A slight difference, especially we do recruit in Nigeria heavily for tech talent. So it's the same market. But I think we need more than one, because right now Paystack is an anomaly, not the, the normal path that a startup is going to face. I mean, I know exiting is not the normal path. Most startups fail. But in terms of people being able, if they're actually doing the calculation of the expected value of their stock options, we need more big wins to change that calculation. But people talk about it now. So when we say we're offering options, this is what percentage of the company we're offering you. If we were to exit like Paystack, this is how much money you would get paid. It allows us to speak in a less theoretical way and a more kind of tangible way when we're talking about our packages to potential employees.
Mm-hmm. Now, if you don't mind me asking, are all of you using options as a recruiting tool?
Absolutely.
Okay. Okay. So, Megan, you just said something that I feel like I need to ask about now. Most startups fail. We all know this, right? So, as a founder, how do you deal with that? I mean, I know it's the entrepreneurial spirit, right? But how do you deal with that idea coming in that statistically, at least, we might not be successful? Is it just what makes an entrepreneur, or is there? How do you handle that sort of fear and uncertainty?
And I think it's compounded too when like all of us here, we're trying to also not just hit a financial outcome, but a social impact outcome. Because I know tons of early stage founders who are not, social impact motivated in the least. And they're like, okay, the risk is I gave up 2 years of higher earning potential for something that might fail. And then I'll go and work at another startup or join VC. But for us, we feel like our early market traction and our data is showing that if a small business owner uses OZE, they perform better. There's less volatility of earnings. They make more money. They have access to capital. And so if we fail, it's not just like I wasted my years doing something at a lower earning potential. It's like, no, we know that this has a huge impact on the businesses that adopt it. And we couldn't find a way to successfully get enough to adopt and pay for it to make that social impact widely accessible. So I think it kind of ups the pressure. But on the flip side, I always say to my team, if solving the issue of small businesses not growing, if solving the issue of youth unemployment because the fact that small businesses in West Africa mostly don't hire anyone, if that was easy, we would have done it. The world has thrown probably trillions at this point of dollars at the problem of youth unemployment, at the problem of, economic stagnation on the continent to some modest gains. So, I mean, failure is what you go into anticipating when you're trying to solve a hard problem. And your day-to-day work is just, can you de-risk it? Like, what step can you prove to get farther and keep going and keep going?
What about? Go ahead.
I completely agree with Megan, and I guess the thing for me is that you also need a little dose of blind optimism about it. You have to really, really believe in your idea and the impact that it can make. And again, I think as Megan and Tumi are, live every day, we're trying to make an impact here on what we do. And, our product will make a difference in people's lives. So it's well worth putting in the extra hours and the extra stress around being an entrepreneur. But so if you really believe in your idea and you engage in a little bit of sort of blind optimism, there's too much work to do to sit and worry about failing. Obviously, you have to manage risk, but an idea that's a great idea should not fail if you're able to put in the work and kind of just solve one problem at a time. So it seems a little naive, but I guess entrepreneurs enjoy that rush every day.
Yeah. I just want to add on that. I was about to say that if you're an entrepreneur, you need to be a little bit naive. There's something in you that needs to believe in the good that could come out of the business. And even when you fail, the failing as an entrepreneur, if you take failure properly, you'll see it as an opportunity to grow again. You might not even start again the same field, but the experience that you have gained will actually help you one day, maybe in your second or even third startup. You would do it so much better that it impacts even way more people that you had anticipated on. So there's always good lessons to go with the failure as well.
Well, there's a long list of very well-known entrepreneurs who had a string of failures before their big success. So the big overnight success that took 20 years or whatever. So I want to pivot to advice, because I think that's sort of the meat of the conversation. I guess we've gleaned a little bit of it here. If you could share 2 or 3 things, and it doesn't have no specific number, but share a few thoughts of things that you're if you were to dial it back a couple of years, you would do differently, or just things that you would really suggest that someone starting a company really focus their time on and attention, where the important levers to pull are that may not be obvious to somebody coming in. Tumi, why don't you start?
Okay, so for me, I would definitely say teamwork makes the dream work. You cannot do it on your own. So, if you get a good team and, maximize on your network, you will really get far. Collaboration is key. And secondly, just do it. If you've got an idea, if you're passionate about it, just do it. You'll find out later whether it works or not. And it's better to find out when you're doing it rather than still guessing in your room.
Okay. One of the things actually is this notion of, when you're funding the business early on, there's probably a lot of mistakes that companies make. Get diluted too fast, or take on money they don't need, or or don't take on money because they don't want to, whatever. Any thoughts on sort of how to think about that piece of the business, like at the very early stages of it? I don't know if Carolyn or Megan, you want to add something there?
Sure. I mean, I guess when it comes to kind of allocation of resources, you're flying blind to some extent. You have to try to measure absolutely everything you can, but also not to be hamstrung by trying to develop everything into an analytics dashboard, which is my absolute dream, but you can't always do it. And so you really have to just sort of take a leap with a lot of the financial decisions that you make, whether that's hiring somebody whose salary is a little bit higher than you'd hope to spend, or whether that's spending a bunch of money on marketing when you're not sure what the ROI of that's going to be. But then you have to measure that, and you have to be really honest with yourself as to whether you made a mistake, and you have to learn from that mistake, and you have to move on. And you're never going to be sure before you make a decision. I think that's my learning from the last few months.
Yeah, and to add that, one of the, I don't know if it's a mistake, because I don't know if I would do it differently when I went back, if I had to go back in time, but, focusing on growing your business by answering hypotheses, like figuring out how different things work, as opposed to trying to hit certain performance metrics, like blindly. Obviously, you need to perform well, but saying, okay, like what we're trying to do right now is figure out if we put this action in the middle of the first time customer experience, is that going to improve outcomes? Rather than saying, okay, we need to pump revenue, we need to pump numbers. Because early on, we made some prioritizations. We were getting a lot of feedback from investors of our freemium business model, saying, point to me the freemium business model that works in Africa. And we're saying, okay, so maybe we're among the first. That doesn't mean it can't work. But it pushed us to try to push to revenue earlier and more aggressively than we necessarily would. So we have these like weird business lines from the early days that we were just trying to monetize as much as we could. That was a bit of a distraction. Whereas if we were maybe in a more mature market and we were like, oh, freemium model, it's going to be years of thirst in the desert and then a nice growth at the end. I think we would have prioritized like precious resources like time and developer time, particularly on more things that improve the experience rather than that push to revenue. And during COVID, we made since our small business owners were really hard hit, especially in markets where there was a mandatory stay-at-home order, we made the choice to not focus at all on growth. For about 9 months, we didn't do any paid acquisition. We really doubled down and focused on our super users to help them survive through this, period of really harsh economic challenges. And I was terrified that I was going to have to go out and raise money with active user numbers that were lower than a year before. Because everyone says if you're not growing, you're dying. But the fact that we were able to stop focusing so much on pushing growth of active user numbers and more focus on the survival of our businesses, we accelerated giving out loans to our customers, which is something that has proven to be really good for our customers, really helps them in their performance, and then also put us on a different trajectory that allowed us to get access to the capital that we needed despite having lower user numbers than we had a year before. So I think, over time, learning whose point of view and whose like metrics you're focusing on can help you kind of forge a better path ahead than just looking at growth and revenue.
That's interesting. It begs the question of, and again, I try not to make these conversations at this event strictly about COVID, but it overhangs everything, right? And could each of you just talk a little bit about the experience of, I don't know if you all were raising money through this, but you all were certainly trying to keep businesses together, keep your customers functioning. Maybe one lesson you took away from that experience that maybe is going to help your business going forward. Carolyn, why don't you try?
Sure. I mean, I guess I come at it from a different perspective because our company was founded when COVID was just making its start. And a lot of what happened during COVID drove the demand for our product. So I speak to my users all the time, and people, or time after time, I hear stories about how one income earner in the household lost their income, and the other person had their income coming in and drew down on SmartWage in order to make ends meet. And that's a sad reality, but it enabled us to really find our fit with SmartWage. And it was an extraordinary experience for us to be able to sort of build the company off that sort of base. So for me, I guess the lesson, is that, there's never a right time to start a business, but this was a good luck from our perspective in terms of finding the right time to bring value to consumers. As we go forward and beyond COVID, and when the world emerges from this crisis, I don't think that need is going to go away. It may not be quite as urgent. So for us, it opened up that opportunity, and it also opened us up to one another. My co-founders I met while I was over in the United States, just because people were generally much more open to talking to one another. So I like to try as much as possible to look at the upside of what COVID has taught us just in the world in general. And it certainly has been an interesting year for us.
Tumi, any lessons you've taken from this that'll carry forward and help your business?
Okay, so from us, it was definitely that technology really does work. So from the data that we're collecting from our users during COVID, we were actually able to predict which were the industries that were going to need more receivables financing during that, during the first wave of the pandemic in 2020. And we were also then able to build models to better assist us on how to lend out to the smaller markets, the tabletop sellers, the micro businesses, because also a lot of consumption or a lot of activity was now going that way, but it was through our technology that we were actually able to see that direction, not only based on market behavior, but also on data. So for us, that was a big lesson, and that's something we're really not taking for granted.
Okay. So actually, I would like to end the last few minutes with a little bit of sort of forward looking, and you can answer this either as what's next for my company, or do you think but more interestingly, sort of what next for sort of the fintech space around SME, small, mid, even micro enterprise. If where do you think the startup population will be, where the energy will be, where the money will be flowing within sort of fintech? Any thoughts on are we done with wallets? Are we going to see more lending platforms, et cetera? What do you kind of think the next year or so is going to what's going to be hot? I guess I hate to ask it that way. Megan, you want to start?
Sure. I think it's pretty market specific because development of fintech has been kind of lumpy on the continent. So I think maybe Nigeria and Kenya are full to the bursting with quick access to loans, whereas Ghana, that's still kind of a new thing. But what I'm seeing start in, for us, kind of the central of our fintech world in West Africa is Nigeria. What we're starting to see is really smart, specific plays in terms of the piping that allows people to connect into legacy financial institutions. Because to date, we've kind of had legacy financial institutions trying to build their apps and do things technically on, but within their legacy model. And we've seen fintechs work completely outside of the formal financial structure, raising debt from abroad and then on lending that, or using cryptocurrency or digital currency. And never the twain should meet. But now we're seeing some really interesting plays that allow you to plug into the financial infrastructure. And I think that's where we'll go next. Yes, we still have work to do on a ton of work to do on infrastructure, a little bit of work to do on payments. But I think once that is kind of the foundation is laid, then we can have more differentiated products and services. So that's where Oze is really excited to go, because instead of following kind of this old model of a completely closed ecosystem where we're getting our own capital and we're lending it out to our users, the easier it is to plug into more banks, then we can get their small businesses who are saving with the bank but can't actually access credit through that bank, the ability to use our platform and now for the first time get a loan from their financial institution. So I think the next wave is really not banks acting more like fintechs, but fintechs and banks finally starting to align their efforts and work together.
Okay, that's interesting. Tumi, what would you say?
I was actually building on to what Megan has said. Integration is definitely, for us, it looks like integration is the next wave, because I mean, we have also faced problems of delayed delivery because of lack of integration, but now that the Bank of Ghana has opened up a sandbox where we're able to integrate and we're able to now work with the banks instead of working against each other. This makes things a lot easier. It makes us work faster. It makes communication between, especially when verification is at the topic. It makes things a lot more easier and a lot more solid, in when verifying identities, when onboarding customers. So definitely integration, that is also the next way for us.
And Carolyn, final word here, because we're just about out of time.
Yeah, I mean, I'm going to be a broken telephone because the API economy is really important to the future of SmartWage. It's incredibly, our little corner of that economy is plugging into payroll. And once all these integrations link up, it's going to be much easier to scale services like this to SMEs and provide them with the tools they need to succeed. I mean, in South Africa, I mean, you were right, Megan, in saying that each market is different. And in South Africa, our big problem is employment. And we know from, our recent budget speech of our president that small businesses are going to be what drives that employment up. And if we don't support them and we don't provide them with tools for higher resilience, we aren't going to make it in terms of them providing all that employment. So, the API economy will allow SmartWage to provide services and all sorts of organizations to scale services in a profitable way to SMEs and help them sort of weather the storm of COVID and whatever other challenges are coming.
Okay, great. Thank you. And we're going to have to end it there. We're out of time. So appreciate everyone's participation. And it was a great conversation. Really enjoyed it. I'm sure everyone out there did as well. All right. Thank you very much. Appreciate your participation.
Thank you.
All right, great.
Thanks, everyone.